Okay, and welcome back, students who are taking financial accounting. In this series of videos, we are working on the assigned homework problems for Chapter 6, which are the short exercises. It shouldn't take too long to do these here short exercises, and these are the only ones that these are the only assigned problems that you have to do for Chapter 6. You don't have to do any exercises or problems. Um, so with this chapter, pretty much it's study the material that's in the chapter. It's concepts, things like that. There's not much application for this chapter. So let's move on. All right, so 6.1 here. Let me get my pen. 6.1 says indicate by letters the type of fraud committed. This is for internal controls. So you have check tampering, check register scheme, expense scheme, bribe, and fraudulent financial reporting. As an example, it says employees write a fraudulent check, making it payable to herself. So what's that? That would be check tampering, right? So number one, at the end of the year, the chief financial officer for Montgomery International recorded $80,000 in sales that had not been made. That's fraud. So it's fraudulent financial reporting. So that's F. Bill is a cashier at a local restaurant. Once a day, he leaves the cash register open, does not record the sale in the cash register when he takes the customer's cash. So that's a cash register scheme. Right? Janet's major customer in California asked Janet to take 15% off the sales price on the next shipment of jeans to his stores. In return, the customer will give her part of the money saved from the reduced sales price. Janet agrees to lower the price. Right? That is called a bribe. Right? Why? On this one here, think about it. There's nothing wrong with asking for 15% off. Okay, but in return, the customer will give her part of the money saved. So think about it. If it's a $100 item, and I'm just going to use round numbers here. If it's a $100 item and it's 15% off, then she's only going to be paid $85 plus tax. So let's just round and say it's $90. Okay, so the customer's saving $10, and if the customer goes and takes 5 of that $10 that he saves and then just gives it to Janet, obviously, the customer's paying 95, saving the 5%, but there's also a transfer of cash which is not taxed, okay, and that's why that's being called a bribe. All right, it's why do that? Why not just charge the customer so that the customer ends up paying $95? Okay, the customer's going to spend the same amount, okay, but why do it in this way where there's that kickback? Well, the consequences are tax consequences, meaning you're not showing all of your revenue, and that would be taxed. So that's a bribe. Sherry Smith, owner of Smith's Real Estate, asked the accountant to ignore any depreciation that should be recorded on assets owned. Okay, well, that's fraudulent financial reporting. You're not reporting your finances the proper way. And Ashley submits a cash reimbursement for a cab ride she never took. Okay, so out of these, that would be an expense scheme. Why? Because it's an expense, and she's just creating a fake receipt in order to get the money back. And I've seen this happen in car. I used to work for a car dealership, and I would see a manager who, this is before I became an accountant, he would go to an auction, and not only would he get the receipts for eating out at dinner, but he'd be asking for them to make the receipts for more than what he actually spent so that he could get reimbursed more. So that would fall under the same thing. That's you have to, it's hard to catch an employee doing that. but it is possible. And if I had, if my employee was doing that, he'd be, gone the next day. All right, 6.2. Identify each of the following as an example of a perceived pressure, perceived opportunity, or rationalization in the fraud triangle. Right, so job dissatisfaction is perceived pressure, right? If I'm not happy with my job, like I'm not making enough money or whatever have you, and that would cause me to, that pressure would cause me to create, create fraud. And it's the same thing with greed, all right? That would be a perceived pressure, because why? When you're greedy, there's pressure and you want that money, all right, in order to commit fraud, right? It's for a good purpose. That would be rationalization. You're making up an excuse. Weak internal control would be a perceived opportunity. If your controls are not strong, okay, then there's an opportunity for someone to take advantage of those weak controls. And then a gambling addiction, that would be, again, a perceived pressure, because I feel pressure, from an outside source. I need this money in order to cover my debts. So it would cause someone to commit fraud. All right. 6.3. Let's see here. Internal controls are designed to safeguard assets, encourage employees to follow company policies, promote operational efficiency, and ensure accurate records. Which objective is most important? Okay, so that's 1. And what must the internal controls accomplish for the business to survive? So that's question 2, and give your reason. Right, so we have internal controls are designed to safeguard assets. They encourage employees to follow policies. 3, promote operational efficiency. And 4, ensure accurate records. So which objective is most important? Here, your answers can vary. It all really depends upon the situation, and depending upon how you bring something to the table, or what factors are all involved, you can say this is more important than that. But the reality is they're all equally strong. Okay, so and they're all equally important. You shouldn't. How can I put this? When it comes to internal controls, you really have to just look at the situation, and whatever you try to use as many controls as you possibly can. All right, and that's just the bottom line. And the reasons for them, these reasons are like a byproduct of having internal controls. So that's why they're all equally the same. But like I said, some people will argue one is more than another, but the bottom line is you should have strong internal controls. Right? What must the internal controls accomplish for the business to survive? It says here in the solution, it says each of the objectives must be accomplished, which is obvious. I mean, internal controls that don't work are worthless. The failure to accomplish any of the objectives can leave the business susceptible to such things as erroneous financial reporting, theft, or fraud, which is true. Any one of these may harm the company to the extent that its survival is in jeopardy. Right? So the question says, what must the internal controls accomplish for the business to survive? Well, to me, what they must accomplish is they have to be effective. Okay, if your internal controls are weak, and let's say someone is embezzling, all right, they could put you out of business, all right? By having strong internal controls, you can catch that embezzlement before your company goes under. Like in the previous question, I had mentioned about the sales manager, asking for receipts that were more than what he was paying. Well, obviously, if he makes an extra $50 or $100 for that day, it's not going to cause the dealership to go under, okay? But let's say you have still you don't want to be losing that extra money, because he's, uh, you know, an, because of an expense scheme. But if if somebody like your controller is embezzling, okay, writing checks and things like that, yeah, that'll, sink a company, and the company won't be able to continue. Right. I'm going to do 6.4, and then we'll pick up with 6.5 in the next video. Indicate by letters which of the following control activities match which of the following descriptions: separation of duties, restricted access, proper authorization, adequate document and records. Okay, so number one, we have pre-numbered invoices. Okay, so that would fall under adequate document and records. Adequate meaning, and this is one thing, invoices, you can create invoices without numbers, but the numbering of the invoices, like if, let's say the numbers, they're numbered, okay, 1004, 1005, okay, part of the internal control is, what if you don't see number 3? Okay, well, why do you go from 2 to 4? What happened to number 3? All right, and it's sort of like in your checkbook. If you have, if these were checks and number 3, you void it, okay, as long as you have that check and it's voided, you know that it falls in sequence. But what happens if you're missing check number 3, 1003 here, and it wasn't voided? Somebody else could have written, a check for that amount. It hits your bank, you're overdrawn. The bank then starts charging you more money, and you still have to cover the check. So it's the same thing with invoicing. You need to control your invoices, whether they're sales invoices or purchase invoices. All right. Purchase invoices. Let's say you're in you have a maintenance crew. Okay. Well, what if they're taking invoices and buying stuff for their own personal use? If you're not controlling those numbers, you're not going to see that somebody's doing that. And the sales invoices, same thing. You might have a clerk who is creating additional sales receipts and trying to collect the cash. All right, so that's adequate documents and records. Okay, locking inventory in a warehouse. Okay, so that's restricted access. That's kind of self-explanatory. Manager approval of sales returns. That's proper authorization. You have to have a manager approve it. Otherwise, you're looking at, somebody who is returning something, without actually returning it, and, collecting the cash for it. Password protection of accounting software. Okay. That's restricted access, password protection. And then 5, not allowing the accounts payable clerk to sign checks. That is a separation of duties. Okay. If the payable clerk is signing a check, they can, write as many checks as they want, but by having 2 people in the loop, the accounts payable clerk creates the check, okay, but then having someone else, having a different individual sign it, then what happens is that accounts payable clerk, they don't have complete control. Now, does that mean that a scheme can't be created here? Both people, you would have, they would have to be in on it. Now you have collusion, okay, where both people would have to know, because this, person number 2 is overseeing what person number 1 does, and if they let person number 1, get away with it, in other words, let's say person number 1 writes a check for $100, person number 2 says, "What's this for?" And if the clerk doesn't have a good reason, they're in trouble. But if clerk number 1 says, "Hey, let's split this 50-50," okay, now you have collusion between the 2, all right, and that's even more difficult to control in the workplace. But by having a separation of duty, it is more likely that this won't happen. Okay. All right, so that's it, and we'll pick up with number 5 in the next video.